Good morning, everybody. Mike Tedeschi over at Perspective Wealth Planning with this week's market recap video. Want to take a look at the four major U.S. indexes, analyze those for you guys in today's video, and I also want to take a look at the dumb money, smart money confidence spread. At the moment, it is very stretched to an extreme, and I think it's very important to pay attention to right here. So let's jump right into it. First and foremost, S&P 500. We talked about this breakout from the ascending triangle pattern last week. We wanted to see it continue to follow through to the upside. And not have what we had earlier this year where we made that marginal new high and then immediately roll back over. So far for the last week, we've continued to head higher. Earnings have been solid, and we also have seen pretty good news flow in regards to tariffs and China, which is also helping to drive the market higher. In fact, that has led the emerging markets, which we've been talking about, to continue to have a very solid move up. We're still watching that 1100 zone on the emerging market index, but very solid performance out of the emerging markets also due to that news flow. When we take a look at the Dow Jones, solid breakout follow through here this week. That hadn't made a new all-time high last week, so follow through there. When we take a look over at the Nasdaq, that also has continued on the upside there. And of course, the area that has continued to be weak, the Russell, continues to fail right at that resistance zone. 1620 on the Russell. It is up into that resistance zone, and you can see here today's action pulling back a little bit off of that level. So really, the bulls continue to need to see the Russell break out from this. And again, this is not just this channel from this year. If we go back to the beginning of last year, that's a really important level there on the Russell. And so we're paying very, very close attention to that zone. Before I get into the dumb money confidence spread, I also want to take a look at the U.S. dollar here. We were watching it for a potential breakdown underneath that 97 zone, and it is back up over 98. So if we back this chart out and we look at it on a weekly basis, this line has just been very, very important here for the last 2 years, right at that 98 zone, and that's right where we're fighting at. So we're going to continue to pay attention to what happens in the U.S. dollar. That, of course, has a big impact on commodity prices, and we have seen gold finally starting to make a little bit of a pullback here over the last few sessions. Really the key level to watch there, if you're paying attention, is about that 1440 to 1460 zone, which is right where it's at right here. That was where we had the breakout earlier this year in July, and so gold bulls really want to see it hold above that zone. If not, that next move essentially would be back down towards that 1380 area, and of course it's going to have an impact. And it's going to be impacted by what the U.S. dollar does, so pay attention over there. Now, we wanted to take a look at was the dumb money, smart money confidence. The dumb money essentially in this study is known as retail traders, and the smart money being the professional and hedgers, commercial traders. And we can see every time that we have gotten to a really big extreme here, the market has subsequently made a little bit of a turn down. We talked about this last week, and we are really at this point stretched, and Sentiment Trader actually ran some numbers looking back over a number of instances where the spread has been this high, and it is a bit concerning. So let's jump right in there. Now, when we jump in and take a look at sentiment readings, we are at near 5-year extremes. The last time that we had a spread this wide was back in 2016 before we had a little bit of a pullback. Ultimately, as you know, we made a really solid move higher after that, but there was a zone of rocky occurrence right there. And then we also had that high spread at the beginning of this year as well, and we did see that sharp pullback in the middle of this year. And so we're really paying attention to right here. I mean, basically in the last 5-6 years, there's only been a couple of readings that were this extreme, and they have led to short-term pullbacks. And the data here does show that it's really the short term that we have to pay a lot of attention to. So when the S&P 500 is within 10% of a 3-year high, and the smart money, dumb money confidence spread is greater than 55, which we're at right now, we've had a number of signals here over the last 20 years. If you look a year and 6 months and a year out, the market's actually positive 83% of the time. So long term, this has not been a negative signal. But if we take a look in that 1 to 3 month zone right here, the market is barely positive at all. 33% win rate at a 1 month, and then 2 month and 3 months out, only 17%. It's only one time out of the 6 occurrences that this has happened was the market positive, with a pretty decent, 4+% pullback average there. So really want to pay very close attention to the short term, right? So when the extremes get this spread out, we typically tend to have a short-term pullback within a couple of month period, which wouldn't really be that much of a surprise when we take a look at the overall market. So if we were to drift up, as this data point would show here for the next couple of weeks, right? The market could easily kind of head up into that target zone that we were talking about from this breakout, being that 3250 zone. From where we're at right now, that'd only be about another 4 or 5% move higher, and then from that zone, with the extreme reading that we have, it would not be surprising to see either a pullback to test that breakout or come all the way back down to that 2900 zone. So that type of action would not be surprising, and historically when we take a look at this type of spread, that has been what we have seen. So we're still looking very closely here at this point in time. I don't think by any stretch of the imagination we're in a safe zone. Yes, we do have a breakout here at all-time highs, but we are seeing some readings in sentiment and etc. that are showing us that we might want to be a little bit cautious here. Of course, when you have a breakout to all-time highs from a 6-month range like this, a lot of times you see that participation follow through for a little bit. Again, we're just looking at some of those sentiment extremes, thinking that there's a probability that we could see that kind of stall out and pull back at some point in the next couple of months. So we're just going to stay on top of this for you guys and pay very close attention to what is going on here. As always, I hope you guys have yourself a fantastic week, and we'll see you next week. Take care.